And what if I told you that there's a behind the scenes infrastructure that's quietly powering billions of dollars in private investments? And most people have no idea what it is. He has helped build over 9,000 investment vehicles, and he's been reshaping how founders, investors, and syndicates actually deploy capital. So we're talking about big boy funding today, why they've become essential for modern day investing, and how automation is making sophisticated investment structures possible. Automation, and we're talking about AI, right? We're also going to dive into Jeremy's journey from managing Utah's $300 million portfolio to pioneering the very popular SPV in a box concept. So join me as I welcome Jeremy on the show.
Welcome to the Bricks and Banks podcast, where real estate meets real wealth. Whether you're building from the ground up or stacking your paper to the ceiling, Steph breaks down property power plays and money moves you can act on. From first-time buyers to seasoned investors, this podcast is your blueprint for financial freedom through real estate, business, and investment. Subscribe now. It's time to build your future. This is Bricks and Banks with Steph.
Hey everyone, welcome to another amazing episode of the Bricks and Banks podcast. I'm your host, Stephanie, and today we have a different discussion in a different way. We're still talking finance, real estate, and investments. And what if I told you that there's a behind the scenes infrastructure that's quietly powering billions of dollars in private investments, and most people have no idea what it is? My guest today is Jeremy Neilson. He's the founder and CEO of Sallie, and is one of the sharpest minds in the SPV space. So for context, SPV is a legal entity that is created for specific narrow purpose. It's usually to pull resources from multiple investors for a single asset or deal. So we're going to talk more about SPVs in this episode because Jeremy is the king of SPV. I like to call him the king of SPV. He has helped build over 9,000 investment vehicles, and he's been reshaping how founders, investors, and syndicates actually deploy capital. So we're talking about big boy funding today. Today, we're breaking down what SPVs really are, why they've become essential for modern day investing, and how automation is making sophisticated investment structures possible. Automation, and we're talking about AI, right? So grab a notepad because it's going to be a very packed and rounded discussion. We're also going to dive into Jeremy's journey from managing Utah's $300 million portfolio to pioneering the very popular SPV in a box concept. So join me as I welcome Jeremy on the show. Hey,
Thank you.
Jeremy.
Thank you, Steph. Happy to be
It's
here.
great to have you. Yeah. So before we dive into the technicals and everything, can you just share your story and your background and how you got here?
Sure. Yeah. So my career, I guess, started with law school. I wanted to get some schooling done. I didn't quite know what I wanted to do, but I knew that I wanted to have a lot of tools in the tool bag, if you will. So I went to law school thinking that that would be very helpful to me. As I went to law school, I didn't love practicing law, like going to a law firm every day. I wasn't interested in that, much more interested in entrepreneurial endeavors. So as I got
Yeah.
out of law school, I didn't really enjoy that everyday legal practice. So I went back to school and I got an MBA. And while I was doing the MBA, I got into private equity, venture funds, and started getting into that world. And I got hired by the state of Utah to do the Utah Fund of Funds. And why I got hired was because I had a law degree. So going to law school, I wasn't sure when I would cash in on that asset as I see it. Immediately I cashed in. I got my Utah Fund of Funds job. I did that for 7 years, helping the state of Utah build a program and investing in funds and helping entrepreneurs. So really enjoyed that, but left there after about 7 years and launched Azure. On day one, it wasn't what it became. Lots of different ideas and worked on different things. I worked on the SBA's $1 billion early stage venture capital program here in the States and did that for a couple years. And then AngelList called me out of the blue. AngelList was really small. They had 6 employees and I had 2. And they called and they said, can you figure out how to do funds in bulk? And that was a phraseology they use, funds in bulk. Basically, we need these venture fund type things and we
Yeah.
need them done really quickly. I said yes, not quite knowing what I was saying yes to. I just knew that I could figure it out. I'd done the
Yeah.
Utah Fund of Funds, I'd done the SBA, I had a law degree, so I knew. It's kind of like all the pieces of a puzzle on the table. I knew I could find them their homes and connect them all. But when I said yes, I wasn't quite sure what the picture was going to look like. So I said yes, figured it out. Co-founder and I figured it out, and we created this SPV in a box. And so before Angelus called and before I figured this out, SPVs were a thing, but extremely rare. It was very
Yeah.
expensive. You'd hire a law firm; they would charge you $30,000 to $300,000 for the documents. There was no automation, no technology. Everything that was done by hand. I mean, even DocuSign wasn't a thing back when I got started with these SPVs. And so we basically took venture capital funds and we stripped them down to the bare bones. What I mean by like that was like, venture funds have a lot of steps and a lot of admin and a lot of processes. And there's legitimate reason for this. We just basically went through every single one and just said, is this needed for a single asset SPV? And for the most part, it's no, right? So we just stripped it to the bare bones around documents, about process, all the steps that we took, and basically we're able to create a product, an SPV in a box, if you will, affordable, fast SPV. And so we did that for Angelus, did that for them for 7 years, did Equity Zen, Forge, Equity B, basically everybody came to us as we had created this product. Kind of the journey continued in that it was very difficult to do this manually without any sort of technology.
Yeah.
And so we started to create a little technology and a little bit more, created some bad technology, some junky technology. Ultimately, we shut Azure down 3 years ago, and I kept the software that we'd been working on, and I turned that into Sallie. So my journey continues on the SPV side, but I've really, we can talk about it, but really kind of pushed away a lot of the manual nature and really want to focus on the automation.
Wow. So this is you starting off at law and crossing into finance, and you're not just doing the bit of it, you're thrown into the deep ocean.
Yeah.
So for
I would
people
actually
listening right
say,
now, say that
sorry.
again.
I was going to say, actually, SPVs are very legal. So it
Oh.
is kind of a finance thing where you're going to raise money financing a
Mm-hmm.
project, financing real estate. But the steps that you take for an SPV are very, very legal. So I call myself legal tech. Yeah, I've created
Oh.
legal tech because it's legal documents, regulatory. It's all these things that have to do with legal setup, legal structure, all that stuff are SPVs. Venture funds get very much into the CPA accounting side, where
Yes.
SPVs are very, very legal. So I kind of kicked the traditional law firm to the curb and went really entrepreneurial, but I continue to use that law degree over and over and over again in the businesses and the things that I built.
Yeah, and the thing is about the US law is very peculiar because each state has their specific laws. So that's why you're well versed in Utah and you can say all things Utah. But if you cross over to a different state like California, for instance, it's a whole different ballgame. So have you had any situation where you had to work with clients in the different states and you now had to go through their law processes all over again? Is there a huge difference across states?
Yes and no. So in
Okay.
the US, we have what we call kind of the Commerce Clause. It's
Mm,
constitutional. It's the federal versus the state. And so
okay.
when the federal government determines that a certain action or activity by a state would harm commerce, it will come in with a federal rule. And if you follow these rules, then you supersede all state rules. And so we have
Okay.
a number of those things in the US. But there's also a lot of state stuff going on. What we typically do in the states is we pick a state, and it's usually Delaware, and we use Delaware as our structuring or our entity setup state.
Mhm.
And those laws we all kind of agree to adhere to and kind of fight under if there's a disagreement. And then we use the federal rules if we can. And if there aren't any, then we have to go with the state rules. So this kind of goes back to how SPVs and all things SPVs are very legal. So there's a bunch of federal rules that we apply. There's one state that we all adopt, which is Delaware. And then when all those different rules and tasks have not been captured, then we go to the home state,
Okay.
California or Utah. But by the time we get to that home state point, there's only a few issues, right? So there's only a couple different issues. But I have definitely used the law degree or approached these different states. It could be documents. So if someone says, I want my SPVs to be based out of Texas, well, now we need Texas based documents or California or Utah. But for the most part, I was able to create a SPV in a box, which basically means everything can be addressed or handled by Delaware and the federal rules. So
Okay.
it hasn't been too bad where you have to really get really granular with the
Wow.
state.
Okay, that makes a lot of sense. And I like the way we started because we started from like way high level, but right now let's dig deeper. So I titled today's episode The Modern SPV, How Jeremy Neilson is Reshaping Private Investment Vehicles. So for people listening right now who might be very new to this space, they have a bit of idea. Let's start with the basics. What exactly is an SPV and why have they become the go-to vehicle for private investing? So just walk us through the problem we're trying to achieve, the problem we're trying to solve with these special purpose vehicles.
Yeah. So you did a great job at the beginning of this episode where you described what an SPV is.
Yeah.
It's a legal entity, and I like the phrase special purpose vehicle (SPV) because you're setting up a vehicle, and these are not just U.S. right? There's Cayman, BVI, Guernsey, Luxembourg, and so they're worldwide, and you're setting up this vehicle for a particular purpose, a special purpose, and that special purpose tends to be I have found a single asset and I want to go and purchase or invest into that single asset. And that can be real estate, that could be airplanes, that can be oil and gas, that can be a barrel of whiskey, startups, whatever it is. If
Yeah.
there's some sort of appreciation to that and you want to aggregate a bunch of people to invest in that asset, then you use an SPV. So why have they become popular? I would say there's a couple reasons. One is that let me start here. If you don't go direct, and when I say direct, that means you yourself pulling money out of your pocket and investing. So it's just you. Say you have lots of money and you have a real estate opportunity and you put money in, that's great. That's called going direct. But if you want to aggregate funds of multiple people, and there's lots of reasons why you would do that. Could be that you want to get a carry. It could be that the minimum investment amount is larger than you can invest per your own budget. And so you aggregate other people. And so if you're going to aggregate other people, you are required to go through a structured vehicle. And you can go through a structured vehicle, either like a full venture fund where you're going to do multiple assets, or you can do a single asset, like a single SPV. So the fact that you can aggregate funds and go into these assets is a really interesting and wonderful option. But if you go full venture fund, very expensive. Documents are very expensive, legal's very expensive, accounting's very expensive, audits, on and on and on. And so you're going to have to come up with a lot of money just for organization, launch, fundraise, and admin. And so that is reserved for the few. I like to say an SPV is the vehicle for the people. It's anybody from anywhere can launch an SPV. They're extremely affordable, they're simple, they're easy. And so as people learn about them, as they discover the ease of them, and as groups like myself and others add some features, some services, some software, that barrier or that fear or that admin expense or just the brain damage you have to go through in order to learn it starts to come down, come down, come down. And it's just becoming more and more relevant, popular, and understandable. And so that's really why they're really growing, is they're just easy and affordable to use.
Okay, that makes a lot of sense. And you said something. You said single asset SPV? Are there multiple asset SPVs?
There are multi-asset SPVs.
Okay.
And I kind of have this vision, if you want, on a graph. In the far left corner would be a venture fund. It's going to be the most expensive, most complex. In the
Mm-hmm.
top right, it's going to be a single asset SPV, which is the easiest, most affordable. But
Yeah.
you can also journey between those two polars or those two poles, if you will. And so
Okay.
you can do a multi-asset SPV and you can make it look more and behave a lot like an SPV, or you can have a multi-asset SPV and it can start to slide closer and closer to a traditional venture fund. And when I say it slides, it's really just about complexity. It's about
Right.
admin costs. It's about tasks that you have to do. And so you can make them simple, you can make them complex, and there's anything in between.
Okay, that makes a lot of sense. So is there a specific threshold, asset value threshold for you to create an SPV? Or you can create an SPV on any amount of value of assets you wish.
Yeah. Any asset type, any value. So they can
Okay.
be tiny, they can be large. I had a client back in the day who got a
Yeah.
particular opportunity. It was amazing. He raised three $200 million SPVs in 48 hours. So there is no real limit to it. And special purpose vehicles can be any size. They can be really tiny too. I've seen them like $12,000, which I think is way too small, but uh, go small, they can go big.
Oh, okay. Okay, that makes a lot of sense. So I know you pioneered the concept of SPV in the box, having done over 9,000 of them. What patterns were you seeing in the markets that made you create that need, that made you see the need to create this concept, SPV in a box, to simplify these structures?
Yeah. I actually didn't see it. I mean, it was a little
Okay.
bit invisible. So I did the Utah Fund of Funds. And one
Yeah.
thing I did see while I was there was that the LP, the investors, were hungry for optionality, more flexibility.
Hmm.
And so I had that in my head, but I wasn't yet able to really come up with the concept. So the way the history works is kind of back to the journey was the federal government through the Jobs Act tweaked some rules here in America that kind of opened some doors. And AngelList was the group that was saying, hey, let's try to do this facilitation thing, these SPVs and we can create a list, right? The angels list, and people can invest. And so it wasn't until AngelList called and said, here's our business idea. Can you figure out how to do it? So I figured out how to do it. But my co-founder and I, we were just like, this was nice little business. Like we didn't think it was going to become a thing.
Hmm.
And so it wasn't until about 2 years later where we were like, it just doubles. The phone just keeps ringing. It's just not stopping. It is just growing and growing and growing until
Yeah.
we said, there's something here. This is really, really interesting. The kind of the growth of SPVs they kind of call it a slow burn. It's not an exponential curve. It's like a nice ramp, right? It's like 10-15% ramp. And I think that's because there's a lot that goes into it, right? So if you're going to do a real estate project, you're going to use an SPV, you just don't sign up online and begin using it tomorrow. You have to think about the project that you're going to do. You're going to have to find the assets. You're going to have to raise the money. So there's a lot that goes into it. So it's kind of that slow burn
Okay.
where, it's not like Facebook or Instagram where it's going to go exponential, but just every year, more and more people discover it, use them, like them. And now LPs are liking them more and more and more as well.
Oh, okay. That makes sense. So, in your experience, what makes an SPV successful? Because I know that not all of them would achieve the purpose for which they are set for. So, but what are the pointers you look out for and you say, okay, this is a good one and this is a bad one?
Yeah. So an SPV is just a legal structure. So there's real
Yeah.
no like specialness to it. So it's really about the asset that you're going to put into it.
Mm-hmm.
And there is no magic wand or anything, right? To figure out if we do that, if you or I knew that, right? We wouldn't be doing this. We'd be retired
Okay.
on a beach somewhere. And so it's really about understanding who that person is that's bringing you the opportunity. But
Okay.
even more than that is because SPVs are usually single asset,
Mm.
you understanding the asset or the asset class in which is being offered by this SPV. So real estate, oil and gas, startups, whatever that is, if you know real estate and someone brings you an opportunity, say, hey, I've got access to this apartment complex, this commercial building, these warehouses, whatever that is, then, you should be able to assess and understand that opportunity. And that's what I would encourage people to do is say, there's SPVs for everything. Trading cards, like Pokemon cards, right? Like there's anything out there that can grow in value. And if you understand and know that market, then you can find an SPV that is capturing or inside that market. And I would encourage people to have passions about things like real estate and then work in those SPVs that have real estate assets.
Okay, that's really good. So, looking at the legalities of the SPV, at what points, I know it's mainly to raise funds for a specific investment, but at what point would you advise your client to do this in an SPV and not just a typical business line? Are there specific pointers, or it is totally at the prerogative of the client to say, I want to use an SPV for this investment?
Yeah. So there's lots of reasons to use an SPV, and I
Okay.
glossed over it briefly earlier. But some examples would be so there's a couple. One would just be if you're going to lead an SPV. So you're say, I'm going to raise money for a project that I find. So you're kind of the organizer, the syndicator,
Yeah.
GP. Those are all kind of the same title. Why not just take money in from individuals writing you a check? There's a couple reasons why you might consider doing an SPV. One is it's cleaner and easier to manage an SPV than it is all of these individuals who have come to you directly. Cleaner and easier in that when they sit on the cap table, they have certain rights, and many times that's appropriate. But if you have them in an SPV, you now just manage that relationship between the project and the SPV. Also, investors that are in the SPV can more easily sell or trade out of that position if
Mm.
needed. You may not want them to or allow them to, but let's say one of the investors comes to you and said, I had a terrible accident or tragedy in my life or whatever it may be. I understand that my money's locked up, but if I could, I would love to try to cash out and get my money back.
Yeah.
And it's much easier to do in an SPV than it is sitting on the cap table. And the final reason would be sometimes investors can be unpleasant or unruly or aggressive. And if they're in an SPV, they're much, much easier to handle and deal with. And you can maybe even swap them out of the SPV than if they
Oh, okay.
are in sitting directly on the cap table.
Well, that makes sense. So you can take out an investor that's giving you headache. Would
You
it
can,
be
if
what are
if
the
the SPV
terms?
documents if the SPV documents say so, right?
Okay.
And they usually do, and you can just say, "I'm gonna get you your money back. This is not working."
Oh, okay. Okay, that makes a lot of sense now. Okay, let's talk a bit about your journey. I know you led the Utah Fund of Funds program and you grew into Azure. Then from there, after leading Azure for 12 years successfully, you started off Sally. So what's changed in the SPV landscape at that point that made you say, okay, there's a fundamental problem that needs to be solved, and Sally, I'm creating Sally to solve it. Why Sally? Not why not Azure? Why wasn't it done at Azure?
Yeah, so Assure, actually, the business wasn't doing well, and so
Oh, okay.
we needed to shut the business down. Assure had a business model that wasn't sustainable. And so there's a couple things about Assure which lead into why Sally. Assure had a large amount of manual or legacy manual work to do. This would be off platform. When I say off platform, like no technology,
Mm,
manual work. And so what we discovered was as you build technology, it does help in particular flows or tasks, and they make things easier. But if your technology does not have all the flows and all the features that you need to run your SPV,
yeah.
you then do on platform and off platform work. So I'll just give an example. So let's say signing documents on your software is really easy and great, unless somebody sends in the wrong amount of money. So if they said, hey, I'm going to put in $10,000 and they sent in 9,900, And
Yeah.
now the documents are wrong. And so you're like, okay, well, it's not that big of a deal. Let's just change the documents. But your software does not allow you to change the documents on your software. So what you do is you leave the software and do a DocuSign. And so what
Oh,
you now have is on the software, you have a wrong set of documents, and off the software, you have a correct set of documents. So of the 20 investors that you had come in, 19 of them are correct, one is wrong, and you have that one wrong one, which has been corrected off the platform. And so now your documents are not all correct. Your platform is not a place where you can go to find truth. You
mm,
go to the platform to find partial truth. You go off the platform to find partial truth. And now you need a third spreadsheet or DocuSign
where you
or
reconcile
document
everything.
for all of it, right? And so if you don't have software that can do all things,
Mm,
now you've just actually doubled and tripled the work that you have to do to manage an
mm.
SPV. So that's what happened at Assure, right? So we were bloated with regards to bad tech, bad processes, double and triple workloads and flows in order to manage all things. And so it was like we just have to start over. It's too bloated. There's too many
Listen.
problems here.
Yeah, and I can imagine the audits back end when you're being audited. It's a lot of explanations here and there.
Yeah.
It's crazy.
So without the great software, you actually shouldn't use software at all because now
Yeah.
you've just created all this work. So it's either everything's manual and that's the source of truth, or you have the great software and that's the source of truth. Anything in the middle is just a huge mess and bloated work and expense that you just can't handle.
Then Sally came into the picture. And so what does Sally do? Can you talk about the company and the problem Sally is solving?
Yeah. So Sally is software and it is a
Yeah.
complete software. It's got all the features, functions, modules that you need to run SPVs. You don't have to go
Mhm.
off platform is really the benefit here. What's great about Sally is it's a white labeled system so everyone gets their own system. It gives them all the functions, it gives them the
Oh,
back end, it
okay.
just gives them all that they need in order to run SPVs and it's automated and it's simple. Taken the 12 years of doing SPVs, we did over 9,000. We had 250,000 different unique investors go through Assure. We had over $14 billion go through. So I often say, I've seen everything, done everything. And so Sally has all of that learning in the software. And so, you may say, why didn't you just create Sally in the first place? Well, because we didn't know what we didn't know. We
Mm.
didn't know all the nuances and all the differences and all the edge cases. And so Sally does me, right? I guess Sally is an embodiment of me and my experience. And so Sally is all of those edge cases, all of those experiences. And the final thing is Sally has much better architecture. So we built software in the past, bad architecture, brittle, difficult to fix, always breaking. And so Sally is that much firmer. I kind of describe it as almost like a 3D printer construction site where if we need a new feature or module,
Yeah.
we just fire up the 3D printer and it adds the module or the room, right? Former systems and what I've seen a lot of other people build, it's like a very center block building where if you like, I need to build a room here, you're like knocking down center block walls. You're like, having to prop the whole building up while you're trying to put in an extra bathroom. And so that's the system we had before and what most people have built around SPVs. And so we just kind of redid everything, just kind of like this. It's kind of like the Angelus phone call. Like we just stripped it
Yeah.
down to the bare bones and just started over and built everything from scratch. And that's what Sally is today.
Yeah. Okay. In talking about automations, I know Sally is solving a lot of problems, but how much of AI do we have in Sally? Because right now people are like AI can do a lot of things. So people are like, why should I pay for Sally when I could just pay my monthly subscription on Claude or
Mhm.
ChatGPT and it's gonna do comparable. So what's the defining feature of Sally against AI today?
Yeah. So actually, Sally has zero AI in there. And the reason
Mm,
it doesn't is because AI does not help you know the nuances of
okay.
all the different legal and regulatory aspects. The other thing is AI can like teach you and answer a question and create a certain feature or flow, but it
Mm.
can't create the intricacies of all of the different points of regulatory, tax, accounting, profile, KYC, AML, and how
Yeah.
all of those elements weave and work together. AI works really well for things that are known or don't have a lot of, kind of a spider web of activity and connectivity. And so we will use AI around like tax and financials and graphs and data and analytics and stuff like that. But the AI is not relevant for hitting a KYC worldwide global database that is
Yeah.
pulling from government agencies to see if someone's a bad actor. AI is not relevant to know the nuances of a provision that you need to put in the documents that covers the specificity of your particular deal and your structure and regulatory environment. And so we could use AI to like populate this or that, but it's kind of cutesy stuff. It's not relevant
Yeah.
or helpful. And so having a complete system, again, you could have Claude or OpenAI or whoever build you one of the hundreds of features inside Sally, but it's not going to create the architecture, structure, and all the nuances and elements of all the legal framework of running SPVs.
Yeah, I can imagine because even if you want to deploy AI agents, you still need to allow these agents to into these databases, which would require a lot of regulations to set up. So definitely it's not comparable to what Sally is achieving in the market.
Yeah.
So would you say that Sally is AI proof or
Mhm.
would there be a need to have an AI integration in the future?
Yeah. It's a great question. Is it AI proof? I don't think anything's going to be AI proof per se. I just, and I'm not technical. I actually have people that do the coding. I'm the lawyer. I'm the one with all the experience and all the
Yeah.
nuance there. And I ask people all the time, I'm like, could AI build Sally? And they're like, no, not even close. Right. So I'm constantly trying to double check on that. And maybe someone's going to prove me wrong go have AI build a Sally replica. But I do think that AI is very special and going to be very helpful.
Yeah.
But for what I'm building and what we're providing is the nuances of individuals. And so I'll just give kind of another example. Let's say you go to your wealth advisor, your tax, and your lawyer, and you're like, how do I manage my funds with my structure, with my family? And
Mm.
they say, well, let's, set up a trust and let's maybe set up another entity that's going to be a disregarded, and then the trust is going to own that. And then you come to Sally, an AI agent's not going to know necessarily the nuances of that. You come to Sally, and I'm going to have that flow built in because I've seen 280,000 use cases. The other thing is these use cases are personal. They're private.
Mm.
So typically AI is not able to really climb around and be trained off of people's personal PPI and their home legal structures that are typically private and for them a secret from the prying eyes of the public. So I don't see how AI can really learn very well about all of these things. So I've only learned it because we provided a product and a service and did those things through a manual and a relationship basis. And so I'm not seeing where AI really plays in the core aspects of Sally, but I definitely see how it plays on the edges.
Okay. I mean, it's very impressive you have this complex system that is addressing all the nuances in the SPV space. And so let's talk about the common misconceptions people have about setting up and managing SPVs. So where do emerging fund managers, syndicate leads, or angel investors typically trip up when it comes to setting up and managing their SPVs?
So setting up and managing SPVs are nuanced with regards to the jurisdiction. So I mentioned it earlier, Guernsey, Luxembourg,
BVI.
Cayman, so on, BVI. I can't speak to the nuances of every single jurisdiction. So
Okay.
I'm an expert really on the US structure. I'm an expert on most things SPVs, but when it comes to like Guernsey requires this type of filing and these
Mm.
document sets, I'm not an expert per se on that. But what I would say is that managers or syndicators, where they get tripped up or where it's a little scary
Yeah.
is the jurisdiction and then the rules around that jurisdiction. So it can be like government filings, regulatory filings, ongoing reporting, because when you do some of these things wrong, depends on the jurisdiction, you can get in trouble and get fined, even if you're really naughty. Our listeners aren't naughty people, but really naughty people can go to jail as well, right? If they try
Yeah.
to use it for ill gains. And then the other thing is the legal documents. So that's always kind of scary. And there's 100 pages. I don't know what it says. And so I actually started a set of SPV documents many years ago that what I just described has always been there from day one. People would be like, okay, let's do some SPVs with you at Azure. And I'd be like, okay, go get some documents from your attorney. And they'd go away and never come back, right? They just couldn't
Yeah.
get over that hurdle. So I wrote a set of documents and they weren't amazing, but they were a good beginning. And I started to give them away. So I'm like, hey, okay, here's a set. Take these to your attorney. And so we did that for a few years and the attorneys edited them. And so got all these red lines. And so the documents got better. It was like a crowd funded or, crowd project of how to get the best SPV documents. And so we
Yeah.
just continued to give them away for free. And the attorneys have just continued to edit them over time. And so myself and basically all the other SPV providers out there have used these SPV documents that I created back in 2013 and have just been allowing everybody to use, and the lawyers have been editing them. We actually have had clients say, "Oh, no, I don't want your free templates. I'm going to go to my attorney and they're going to write me a fresh set." And we're like, "Fine, do whatever you want." And then they would go to their attorney and they would charge them $15,000, $20,000 and they would send the fresh set to the client. And then the client would walk over to Assure and they would be our documents that were free off of our website. And so they've just been used by hundreds and hundreds of attorneys and
Hmm.
thousands of SPVs. So we have a document set that's out in the marketplace that is a great set. So people don't need to be too scared about that. But yeah, that kind of regulatory legal side is what people get nervous about.
Oh, okay. Yeah. So regulations out of the way. What would you say is a typical timeline for you to create and deploy an SPV?
So the timeline would be very first time. So if you're like very first
Hmm.
time, you're setting everything up with Sally, it's going to
Yeah.
take you 3 to 6 business days. Now, maybe
Okay.
because we have to set up a couple entities for you. Maybe you want to review the documents, things like that. So kind of that
Yeah.
first one, give yourself a week. Thereafter, your second one takes about 60 seconds to launch your second SPV. So yeah, once you're set up, it's extremely fast.
Okay. Once the SPV has achieved the purpose for which it was set up, do they close it or is it put back on a rolling basis? How does that work? Or is that's totally at the prerogative of the client?
The clients can do whatever they want with the SPV, but
Mm.
typically you would shut it down. In
Oh,
America, we have something called a master series structure, and your SPVs are free. Like there's no government costs. And so
okay.
you can launch them for no cost, you can shut them down for no cost. And so it just
Oh,
makes them very simple and comfortable to just kind of throw them in the garbage, if you will. Like they're disposable, kind of like daily disposable contact lenses, right? Just use them once and throw them away. Um, so usually you don't reuse an SPV because of all the owners, right? You'd have to kind of formally clean out all the owners and get new sets of
mm.
documents. It's typically more work than it's worth.
Oh, okay. Okay, that makes sense. So I know Sally has a focus on helping unlock liquidity and overcoming transfer restriction in private markets. So can you walk us through how these SPVs are being used for secondaries? What is the unlock and why has it been easier to do before Sally came on board?
No. So secondaries basically is you're wanting to sell a position that you've
Mm-hmm.
already invested in previously. So when you kind of go in originally, it's called primary. And when you're selling that position to a third party, it's called secondary. And
Okay.
SPVs are very easy and fluid and a great vehicle to use for secondaries for a couple reasons. One is when you're sitting on a cap table of a project or a company, the owner of that typically doesn't want people to swap out their ownership. They don't want to have to worry about who's coming and going. They might not want maybe somebody they don't want competitor, somebody sitting on the cap table. So
Okay.
they're very selective about that. But SPVs, as they sit on the cap table, you can sell an entire SPV or you can sell
Mm,
a single seat in the SPV. I see this all the time where someone's like, I invested in, let's say, Anthropic 2 years ago. It's now worth 10 times more what it was then. And yes, I could stay here and maybe get another 10x, or maybe I just want to cash out. And so if you went to Anthropic and said, hey, I want my buddy to buy, I just want to trade seats. He's going to come in and I'm going to leave. They're going to say, no, we're not going to do that. But if you just said to your buddy, hey, I'll just sell you my SPV and you can have my seat, Anthropic doesn't know anything about that. And your buddy
okay.
gets to then take your seat and you get to liquidate. It's the same thing inside SPVs where you can sell any particular single seat inside that. And so, up until SPVs, venture funds would have a very difficult time doing that because of their structure, because of their
Yeah.
LP base, because they have so many investments inside their fund, because of the relationships that they're trying to build. Also, because if you go directly on the cap table, the company's not going to let you trade that out. And so, SPVs are this kind of perfect little vehicle that allow you to be far more fluid and liquid than any of the other structures we've seen in the ecosystem.
Okay, that makes sense. So let's talk about the operational challenges involved in running an SPV. I know before Sally, you said it was difficult for to make alterations when it's on platform and you make those alterations off the platform. So what are the operational challenges you see that are related to these SPVs of managing them, the admin costs in managing the SPVs?
So when you launch an SPV, there's
Yeah.
19 tasks or parts. Some are quick and easy, and some are long and difficult.
Mm-hmm.
But you're going to go from launching an SPV, so you're going to be filing paperwork with, let's say, the state of Delaware. Now you're going to need a registered agent, so you need to hire a registered agent. And now
Okay.
you're going to need a bank account, so you need to get an EIN number. And you need to go open a bank account, and then you need to get some documents that you're going to have everybody sign. Now you need
Hmm.
to onboard all of these investors and have them sign and send in money, and you need to do background checks on everybody. And so I'm just going to stop there and say each one of those things can be very manual and time consuming. Delaware takes days.
Yeah.
EIN numbers feel very legal, even though they're not. Documents can be very complex and expensive. Onboarding investors can be very difficult. You set up a DocuSign, and when we first did this at Assure, we would get people to fill them out by hand and they'd mail them to us and we couldn't read their handwriting. And then we would call them and try to get them to, read it
Yeah.
to us. But then we started to use DocuSign and people would not follow the flow and they would just like sign it and not fill out any information, not their name, not their amount, not their phone number, right? And we'd be like, oh, this is wrong. Can you do it again? They'd get
Mm,
confused and they'd get angry. And so there's so many kind of moving parts. We called it herding cats, trying to get everybody to fill the documents out correctly and send in their money and give us the information. And so it just was very, very difficult. A lot of admin, a lot of work. And then once the SPV closes, there's less work, but there's still work. There's taxes, which can be complex and difficult. And people really want those tax returns and the K1s as soon as possible. They may have a membership transfer. There may be a distribution. There's just
mhm.
kind of a slow, steady hum of extra stuff that comes and goes for the SPV. And if you're going to do it manually, then there's just a lot of work and onboarding and frustration by lots of people. And so Sally is about making this as easy as possible, automated, right? Like you just fill out a form basically, and now everything's done for you in the background. There's no more of this, you did it wrong. Like the software makes sure that you do it right and makes it smooth and easy. And just things are firing off in the background and things are just happening and you don't have to really worry about it. And so, yeah, the admin of SPVs can be heavy, but I've
Mhm.
always known that it could be light. And, we
Yeah.
started heavy and just it's kind of it'd be weird for anyone to see me just watch my software work and smile because it'd be like, what are you smiling at? Right. It's just a computer screen. And that's because I know what it's like to do it without the software. And so I just sit there
Yeah.
and grin and I'm so thrilled that all working so perfectly.
Okay. I like the way you put it. Can you share like a transformation story for a client that before and after Sally that made you feel like okay, what I'm doing is worth it, and all those years grinding is worth it, creating this very complex and all-in-one platform.
Yeah. So one example would be onboarding investors. And so when I say onboarding investors,
Okay.
that is them filling out a profile, telling us
Mm,
who they are, right? So they're going to use a trust with their spouse and they're going to invest through that trust. And they need to
okay.
tell us names, addresses, EIN numbers, upload a passport, stuff like that. And back at the Assure days, 90% of all of the bug, I'm going to say in quotation, bug ports back from the investors were, I can't figure out how to get through the flow, the boxes, the data inputs, um, to to invest. I can't get there. I
Yeah.
also heard of a Sally competitor that they say 40% of all investors bail out. Like I can't do it. It's too complex. I don't get it. And Sally has 100% pass rate. And so I sit there and stare at it, and it's like ding, like green light, right? Completed, 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 completed. And you just sit there and smile. And you're just like, we did it. We figured it out. After 250 investors, we finally figured out how to onboard investors and make it smooth.
Wow, that's very transformational. And yeah, it's a sigh of relief that, okay, you figured out how to, it's just like when you're untying a knot, you're trying different ways, and that last bit, and it comes off, and you're like, okay, this
Yeah.
is worth it.
Good imagery.
So, in your opinion, what are the tax and regulatory trends fund managers should be paying attention to in 2026?
I would say that the trends and the changes are on the LP side. And what I mean by that is LPs are interested in SPVs. They want to
Mm,
be a part of a transaction and they like to be part of the selecting. So what I mean by that is a venture capital fund is blind pool. Means,
mm,
I'm going to go do 12 real estate projects. And you're
yeah,
like, which ones? Which ones? Do I know any of them? They're like, no, I haven't picked them yet. Just trust me. Right. That's very different from saying, look, it's this apartment complex right there. We can drive over there right now and you can touch it and you can walk around. I'm going to buy it. Do you want to go in on this project? That's a revolutionary change for investors who just really love being a part of making the decision, being a part of knowing exactly what it is that they're investing into. And
mm,
so that's really where I see the trend continues to go, which is those with money really enjoy feeling some sort of ownership and making a decision for themselves of where their money's going to go.
yeah. And I know that one of the key things in making a decision is clarity. Once you give them clarity on everything is clear, they make that decision quicker than when they have to do their personal due diligence. Yes, I like the way, the way you
I
put it.
agree.
So, looking ahead, where do you see SPVs going in the next 5 to 10 years? And what role do you see Sally playing? Because Sally is already the big dog in the game. But what do you see Sally? How do you see Sally shaping the future of SPVs?
I see SPVs continuing to just grow. And I wrote an article kind of stealing a phrase,
Okay.
which was SPVs are going to eat the world. What I mean by that is they're just going to continue to proliferate. They're going to be more and more and more and more. And in my mind's eye, what I see is I see a big meadow and there's a number of large trees, which are the venture
Mm,
funds, but there's millions and millions of blades of grass, and those are the SPVs. And both are symbiotic and both are needed for the ecosystem. And I just see more SPVs, more opportunities for people to participate. And then Sally is going to continue to be that kind of that beacon, if you will, of that these can be automated, these can be easier, faster,
yeah.
smoother. Your investors don't have to get frustrated. This can be a very enjoyable experience rather than sometimes a frustrating one.
Okay. What about for yourself? Do you see yourself still playing in this space long term, or would you be passing the baton to someone else?
I've kind of you said it as well early. I've
Yeah.
termed myself or labeled myself, given myself a title of the godfather of
Yeah.
SPVs. And so when I first started SPVs, I wasn't sure how much I liked them, but just as I've been around more and more and I've been able to experience and work with users and investors, I just really, really like them. I'm gonna stick with it. And I really have a lot of ideas on innovation and more things to come. And so I definitely am not tired of SPVs yet.
Yeah, definitely. Yes, you keep it cranking. And I like the way you've broken it down. It makes a lot of sense now. We looked at the technicalities, the modalities, and what Sally is essentially fixing in the marketplace. So thank you so much for that rounded discussion. So
Yeah.
that brings us to the second part of the segment, which is the firecracker round. So these questions are basically to ensure you're not AI.
Okay. All right.
Pick your brain. So this is me hitting you with a bunch of questions and you hitting me right back.
Okay.
Just get to know you better. So what's one book that fundamentally shifted how you think about building companies or businesses?
One that really impacted me was called Scaling Up. It's more like a
Okay.
textbook, but
Hmm.
Vern Harnish at Assure, we just doubled and doubled and doubled. And when I read that book, it was like, the lights coming on and the curtain opening. It was transformational for me.
Okay, that's nice. So tell me about the time you said no to something everyone thought you should say yes to, and you were right.
It's a good question, and I don't think I have a good answer. I'm the yes guy.
Okay.
My co-founders and others, they're the no people. I'm the yes person. I love ideas. I love businesses. I can't think of
Anyone?
no's. I think of yeses, like saying yes to Angel List, even though I didn't know what I was doing, and that turned out to be the right thing. So I don't have a good answer on no's.
No, no worries. So let's talk about your best and worst investment moments. Could be deals, it could be personal investments. What's that for you?
I'd say the best investments are investing in myself,
Yeah.
believing in myself and building the things that I believe in, right? That kind of that yes mentality.
Mm-hmm.
My worst investments tend to be on platform like where I don't know what I'm doing, right? So I'm like, oh, that
Okay.
sounds good. And so I've got a handful of those where I was like reading a one pager and be like, that sounds wonderful. Here's $5,000, right? None of those have worked out.
Oh, okay. So if you could leave our listeners today with one lesson from everything you've built, what would it be?
Ooh, one lesson. There's a quote that I really like that I
Okay.
think goes well for starting companies, building companies, but also investing. And that
Hmm.
is the harder you work, the luckier you get, but trials and tribulations are mandatory, but misery is optional. And so
Hmm.
as we work hard, right, there's
Yeah.
always going to be frustrations and frictions and ups
Mm-hmm.
and downs. I've been through my share, but you don't have to be miserable about it. Even though, you feel like I'm going to be miserable. I lost my money or my company didn't work or that idea didn't work. But if you just kind of pull back and you're just like, look, the harder you work, the luckier you're going to get. It's going to be
Hmm.
tough. Trials and tribulation is mandatory,
Yeah.
but misery is optional. So it's a quote that I try to live by.
Misery is optional because you just have to keep doing it. It gets easier over time. And the point you allow frustration to step in, it's up to you. That's why you said the misery is optional. Okay. Because there will always be trials, there will always be tribulations, there will always be pushbacks.
Yep.
The world is not fair. That's one thing I've learned so far. The world is not fair. So you just need to
Yes.
dodge it of that.
True.
So what do you like to do to unwind and reset when you're not so busy
Yeah. I'm a
doing
family
SPs?
man, married, I've got 4 children,
Oh,
so love spending time with them, but I also love movies and
okay.
live events. So if I could watch a good movie, I love that, or going to a live event, sporting or concerts, stuff like that,
Yeah.
Broadway plays. I really enjoy
What's
viewing
your
live
favorite
events.
movie?
My favorite movie, very difficult, but I love The Lord of the Ring, all of those.
Give me your top three movies of all time.
All right, so I'd say the first Lord of the Ring Fellowship.
Yeah.
I would say that Avatar 1, I saw that in the theaters.
Okay.
Um, and then the other one that's maybe kind of weird would be it's called Gattaca,
I
and
don't know what's that.
it's kind of a not very well known one, but it was just
Yeah.
it kind of goes along with my quote. Like the punchline or the tagline of it is there is no gene for the human spirit. And it's kind of a futuristic about, working hard
Okay.
can get you great results. And so it's got Uma Thurman and Ethan Hawke in it and Jude Law. So
Yeah.
it's one that I've loved for all these years.
That's nice. So, what's one thing you look out for when you're building your team? Because I know stepping out of Azure and going into building Sally, what was the one thing you look out for when you were bringing in people to the company?
A culture fit is
Mm,
very, very important. After you build a large company, you realize how important that is. And I'll say, this is going to sound a little arrogant, but I needed my team to believe that I knew SPVs inside and out. And I ran into problems where at Assure, where I was battling with people about kind of really core concepts. And so as I build Sally, I just have to have my team. You don't have to agree with me, right? But you
yeah,
have to have the respect that after 9,000 SPVs, I know what I'm talking about.
definitely.
And if you've only done 3, there's a large difference in our knowledge base.
Oh, okay. That's nice. So, Jeremy, it's been fascinating having you on the pod today. I feel like we only scratched the surface because we need to dig deeper. So, we should have a different session where we talk more about SPVs and what Sally is doing. But I know we want to let you go. But before we let you go, how can we get through to you? Your socials, your website, how can we reach you?
Sure. Yeah, LinkedIn, Jeremy Neilson. I do have a YouTube channel called All Things SPVs. And on that channel, I spend time educating you on how to do things manually. So if
Hmm.
you ever wanted to know how to do it, I teach you how to do it. The
Yeah.
idea is once you figure out how to do it manually, you'll realize you don't want to do it manually and you'll want Sally to help you with it. But All Things SPVs or Jeremy Neilson on LinkedIn. Love to connect with anyone that would like to reach out.
Okay, amazing. I'll make sure to leave the links in the description so we can just go right there and click on the links. Jeremy, it's been fascinating having you on the pod today. Thank you so much for sharing your wealth of knowledge. You basically distilled 9,000 not 1,000 SPV knowledge base in 1 hour. That's crazy. How did you do that?
Yeah, happy to do it.
And there we have it, guys. Jeremy has basically broken down what SPVs are all about. He broke down the technicalities, the regulations behind it, and why you need Sally. So don't bother learning about SPVs. Just grab Sally and have your first SPV deployed in the next 6 days. So we come your way again next week. Let's continue to turn knowledge into action and bricks into banks. This has been Bricks and Banks with Steph, and this is me signing out.